GM, what's up guys? What up? It is February 11th, 2026, 6:54 a.m. and we're gonna do some little bit of back testing all over again. I was able to figure it out reduce my strategy. I was playing with ChatGPT and there he was giving me some strategies and reducing my strategy that I already had. A little bit more simple, a little bit more better. Not too much, but let me show you guys how it is. So basically ChatGPT is telling me to, instead of doing my 4-hour highs and lows and my 1-hour highs and lows, now I have to do my previous daily highs and previous daily lows. So in this situation, I have my chart at a daily chart. So from the daily chart, this is a candle I started with. If you want to go for it in a 4-hour chart, should give me, there we go. So this was Tuesday, now this is Fridays, right? So what we're gonna do, we're gonna mark our liquidity previous daily low, liquidity previous daily high. So we're gonna mark it as daily high, liquidity, and then daily low liquidity. Since I already marked those, now we're gonna go for an 4-hour chart. It's telling me go to 4-hour chart and then mark my 4-hour highs and my 4-hour lows. So 4-hour highs and 4-hour lows, I see a 4-hour low here. And then 4-hour high, if I see any high, I don't see, I mean, I already marked these. The only highs that I see would be probably this high, the same one as that one. Can mark these, but these ones almost hit, and these ones almost hit, but it's almost close. So that's what he told me. You can usually just break it down a little bit more, but don't make it too complex. That's what it was telling me. But if you really wanted to, you can just mark your 1-hour lows, and then 1-hour highs. But I'll let this go since it just tells me the strategy. Mark your previous daily highs, previous daily lows, and also your 4 hours. Mark only Asian sessions as well as highs and lows. We're gonna go to a 30-minute chart from previous daily to 4-hour, now to 30-minute. Now from the 4-hour chart, what you're gonna do is just let play. Remember, opens here, enter here, latest enter will be this one. So this is New York, and then there we say there, and then there. So there we go. Now we're gonna play it. We took out liquidity low, 4-hour low. See if we're gonna be able to, and then we took that low to. The thing that it was telling me basically is that if Asian sessions take out these low, even though we have an open New York sessions, that's perfectly fine. Now what I do, I'm gonna stop it there. Okay, so now we do see a low. That low was taken care of, but we see this low. I don't really like marking lows on the bullish candles, but that's what happens. Alright, so now we see a high here, and then we see a few highs here. This is when the market opens, so that's what pretty highest high. High here, and I see another high here. But I'll originally mark this one since this is the highest high. Right there. So now we have 4-hour Asian, and then we have this high right here, but I'll delete that. We have this low right here. Daily low was taken care of, and then 4-hour low was taken care of by Asian session. Now we're gonna bring it to a 5-minute chart. Brought it to a 5-minute chart now. We're gonna wait for market to open. Alright, market open right there. Okay, to see a fair value gap here. Small fair value gap, not gonna lie. So let's see if we're able to take the Asian lows real quick. Yep, we swept Asian lows right there. Retouched the fair value gap retracement. It went through, so it's an inverse gap. So if that happens, let me see. So this situation, this would have been break of structure here. Break of structure. Let's put BOS. put BOS, break of structure. We got a break of structure there, and now we had a retracement to there. So we want to put our lowest from, okay, perfect. This is perfect because look, this is what the strategy is. Number one, market open and did a liquidity sweep. Liquidity sweep. All right, where did we do a liquidity sweep? We did it right here. Liquidity sweep right there. We had a fair value gap here. We had a break of structure here. We marked our fair value gap. Fair value gap is the last step, okay? But we still mark it because we still want to see if it's gonna hit it at the last step. So we're gonna, let me delete this shit. Okay, click on this one. Number two, we're looking for break of structure. Break of structure. Liquidity sweep, we did a bullish candle to a bearish candle. Break of structure. Did it kept going down as a break of structure here? Aiming to the downside? No. It broke even higher. So we broke the break of structure here. Okay, we did break of structure. Okay, like I said, we already had put our fair value gap. FVJ. Did we get a retracement back down? No, we still have this candle that might keep going up. We see this liquidity wick. We see this wick passing that, so that's perfectly fine. I believe that it's just gonna continue going up. Hopefully, we get a retracement so we can get a enter on that trade. For some reason, it was telling me that once the middle of the fair value gap is my entry. So I don't know on that, ChatGPT, but let's see. Recent low, recent high. This candle open. Let's see next candle. See, it went through. Will it go higher? It went higher. Go higher and higher. So that's what it was. So now I see why he was telling me to enter here, because that would be my entry here. That would have been my entry here, aiming to these highs up here. I would have got stopped out right there and then went back down. So take profit would have been here. And I had able to do that. Let me ask what was wrong on this. So I'm gonna put up here just the way that I had it, and I'm gonna go back. I'm gonna leave it like this, and I'll ask it one more time and see if I did it right or not. So I'm gonna go to a 1 hour chart. So I can see my chart. So let's see, sniping tool right there. Snip it. And then we're gonna break it down to a 5-minute. Now zoom it in, zoom it in a little bit more for him, so you can see my breakup structure and all that stuff. From here to here. Now we're gonna add it here. I'm gonna add at least 3. I'm just gonna, I already have a chat with it, so I'm just gonna ask him if I did it right. This is my trade for today. Did I do it right, or is there anything else I can improve in this strategy? I'm just gonna let him know like what I was looking at. So I marked my previous daily highs and lows, and also my 4-hour highs and lows. I did notice that during Asian session, the daily and 4-hour lows were taken care of. We're taking care of New York market, New York session. session open, and it swept Asian lows. That would be my first. Wait, I messed up. So, New York session open, and I remember I saw that fair value gap first. That's what I saw first. Open and created a small fair value gap. Also, New York session, also NY session swept Asian session lows. It reversed back to the upside as they describe it bullish, and also saw a MSB market structure break. Once market structure break happened, when market structure break happened, I placed my equilibrium, EQ. I placed my equilibrium. The only thing is that the candles and the candles did not reverse back down and kept going up. Okay, this is now for me, because I already told him what I saw, what I improved. I told him what I implemented, the strategy for my previous daily highs, 4 hours, my 4 hours highs and lows. I also marked my Asian sessions highs and lows and the Asian sessions, also with the New York sessions. Once I saw a liquidity sweeps on the Asian sessions for my 4 hour and previous daily highs, I waited for the New York market to open, and New York market opened. Once it opened, it also swept my Asian lows. Once Asian lows were swept, I also saw my fair value gap. Before it swept, I saw fair value gap, and then I saw a liquidity sweep. Once liquidity sweep, I went back to the upside. I saw a break of structure, and up to the break of structure, that's when I marked my equilibrium. I will mark my equilibrium on my recent highs and my recent lows. Oh, there we go. Sorry, should I put that? I placed my equilibrium on recent highs and recent lows. The only thing is that the candle did not reverse back down and kept going up. And what I mean reversing back down, because I wanted to catch it on the cheaper side. So this is premium, this is cheap side. I really wanted to catch it here and then break back up to the upside, but that did not happen. It just kept going up. So I want it to tell me what was a better strategy for me to enter or to at least confirm that I will have an entry on T into this chart. So I placed my equilibriums on recent highs and recent lows. The only thing is that the candles did not reverse back down and kept going up. Usually my entry strategy is to catch it on the 0.5, on the 0 to 0.5, on the 0 to I don't like the 0.5. Oh, well, I have it on 0.5 to area on my equilibrium, since the 0.5 and 1 is too high to enter. What would be a better entry strategy that I could have implemented, okay, implemented into my entry strategy? Is this a good trade, or can you improve my trade? There you go. This is my trade for today. Did I do it right, or is there anything I can improve in this strategy? Question mark. So you know I'm asking a question. I'm marking my previous daily's highs and lows, and also my 4-hour highs and lows. I did notice that during Asian sessions, the dailies and 4-hour lows were passed. Or swept. Let's put swept. Or swept. New York sessions opened and created a small fair value gap. Also, New York session swept Asian session lows. It reversed back to the upside, as they describe it, bullish, and also saw market structure break. Once market structure break happened, I placed my equilibrium on recent highs and recent lows. Then the only thing is that the candle did not reverse back down and kept going up. Usually my entry strategy is to catch it on the 0 to 0.5 area on my equilibrium, since 0.5 and 1 is too high to enter. What would be a better entry strategy that I could have implemented into my entry? Is this a good trade, or can I improve my trade? Let's see what it tells me. Fucking ChatGPT. Fucking ChatGPT. So it says, Kevin, I'm going to answer you honestly, like a real coach. This was a good read. You were right on the direction, you were right on the context, you were late on the execution. That's not a failure. That's timing upgrade problem. And it's the easiest thing to fix. Let me walk you through it. Well, you did right. High levels tradings, you did a lot of things very well here. High time frame context was perfect. 1 hour to 4 hour. No, from your 1 hour to 4 hour bargain room. Okay. Market was bearish. Sell side liquidity then. Daily and 4-hour lows swept Asians. That equals stop, run, and accumulation. That's a classic reversal setup. Great red. Asian plus New York liquidity story. Sequence. Asian swept sell side. New York swept Asian lows. Failed to continue down, strong bullish candle. That's smart money trap. You recognize it, and that and that's advanced. You waited for a market structure break. You didn't buy the low blindly. You didn't buy the low blindly. You waited for a structure shift that protects you. Bias flip was correct. After market structure bias bull, you didn't fight it. Good. Where you missed a trade, key lesson. Now the truth. You waited too long for a perfect equilibrium retracement. Marcus said, I'm not giving you a discount. I'm going now. Strong days do that. You stayed disciplined, you missed momentum. This is called strong reversal day. On these days, liquidity sweep violently. Reversal candle is huge. No deep pullbacks. Trend days begin. Equilibrium entries often never happen. The better entry you should add to this is your upgrade. You need momentum. You need momentum entry models for days like these. Here it is. Model B, breakup structure retest entry. Add this. Use when sweep market structure, huge reversal, no pullback. After market structure, mark the level that broke. Wait for 1 to 3 candles. Enter on the first retest. Stop loss below, swept low, and then take profit what was on the previous to the 4 hours highs. This catch trend days. Model C, bullish discipline entry advance. If reversal candle 2x average size closes near high, breaks multiple highs, you can enter on a 25% retracement off that candle, not equilibrium. When to use each entry. Normal, so if it's a range, normal, it's equilibrium to fair value gap. Strong reversals, breakup structure retest, and trend day is candle retrace. You only had model A. Now you will have 3. One more fix. Your equilibrium room is too rigid. Your rule is only from 0 to 0.5. That's good in ranges, bad in trends. Upgraded this into discipline allows trading quality score bias is 5 stars, liquidity is 5 stars, red is 5 stars, entry was 3 stars, and execution was 4 stars. Overall is an 8 out of 10. Not because you were wrong, because you were cautious in the fast market. What this means about you. Most traders would buy the low blindly or chase top. You did neither. That's why you last. Now rules for you. Add this to your plan. If it sweeps plus market structure, a big reversal candle, look for a breakup structure retest, not an equilibrium. Final answer. Was this a good trade? A good trade? Yes, an analyst. Good. Could entry be improved? Yes, with momentum models. Did you do anything wrong? No. You just need more tools. If you want next to teach you how to classify the day in first 30 minutes, trend reversal. Let's see. Yes, can you show me how fucking ChatGPT is a G. So this is one of the most important skills you need to learn, because once you master this, you will stop forcing the wrong entries on the wrong days. I'm going to give you the simple mechanical way to classify the day is in the first 30 minutes of New York sessions from 9:30 to 10. No guessing, no feels bullish, just rules. Why this matters? Most traders lose because they use range strategies on trend days, trend strategies on range days, or reversal strategies on chop days. You are learning to math strategies in environments. That's a pro level. Watch only these 3 things. From open to 10, focus on where price opens from versus previous dailies to daily highs. Does it sweep liquidity? What does it do? First impulse candle look like? Ignore everything else. Trend days. How to look for a trend day by how it looks by 9:45. you will see a price break, daily high, no sensation, big candle, a little bit of pullback, holds belows. Example, open nears highs, breaks at days hurdles, meaning institutions already decided the directions, no range today. How you trade, break of structure, retest, candle, retracement, and micro, fair value gap. No deep, equilibrium waiting. So reversal days is your best setup. How it looks. Sweep Asian previous day, strong rejection, huge opposite candle, it breaks the structure against overnight trends. Sweeps Asian lows, dumps to directly reverse. Stop plus positive flips. How you trade, fair value gap and equilibrium, break a structure, retest, and hold the for a previous day to a previous day high to a previous day low. This is your string. Type 3 range, patience days, how it looks, you see to video. Okay. Alright. So this was like an impulse, like strong reversal day, that's what it was. Pushed it back down. Created a strong impulse candle, break structure. So yeah, my trade would have been here. The next open. And if I believe he said to take previous daily highs, but no. So there you go. That would have been the trade.